like Phil Grande and philsgang.com.
It doesn't have to be hard or complicated to learn how to invest in stocks properly. It's like anything else. You're going to golf, or you're going to learn how to play tennis, ski. You need to be with someone, learn off of them, one-on-one. Now, that can be really expensive, cost thousands of dollars. But I have a program that you can join for 10 days free.
Go to philsgang.com and sign up for a free 10-day trial. Phil Grande has developed tools to teach you how to invest in stocks properly. Not only when to buy stocks, but how to sell stocks short.
85% of people in the market lose money. Get out of that group by just joining Phil's gang.
Now you can learn to invest like a pro with a pro, Phil Grande. Take advantage of this special offer for a free 10-day trial at philsgang.com.
Try it. 10 days free.
That's philsgang.com.
philsgang.com.
If you want to invest your money and grow your wealth, listen to this.
Hi, I'm Phil Grande at philsgang.com. You know, I get so tired of listening to the same garbage every day, listening to the fake business news network telling you why you should buy this stock, why you should buy, and they're always wrong. Join my gang, philsgang.com, free for 10 days. You're going to learn when to buy a stock and when not to buy a stock. Hey, years ago it was different. You could buy a stock based on fundamentals. You could buy a stock based on earnings. You could buy a stock based on PE ratios. Those days are gone. That ended with QE. That ended when they financially engineered the market in 2008. Gone. Now you got to follow the money. And we have the knowledge because we have the chart. Pro 2 color code chart tells you when to buy, when to sell, when to run like hell.
For a limited time, you can join Phil's Gang free for 10 days.
Check it out, philsgang.com. Get the truth, get the knowledge, and understand how the market really works.
There's a lot of noise out there in the financial world. Bank failures, interest rates, bonds versus stocks. It's a lot. That's why it's important to find a voice of reason that can guide you through these volatile times. Phil Grande and philsgang.com is where you can find honest, helpful guidance to successful investing.
Get the knowledge and understand how the market really works.
And for a limited time, you can join Phil's Gang free for 10 days.
philsgang.com. That's philsgang.com.
Are you a stock market investor without all the information?
What are you, nuts? Market's going up, market's going down. We're getting all this bad information.
How do you invest intelligently? Phil Grande can show you.
If you want real information and you really want to know what the market's going to do and you want the truth, go to my site, philsgang.com, and also listen to me on my radio show every weekday at 3 o'clock Eastern.
Phil's got the answers at philsgang.com.
That's philsgang.com, where you get the truth and you get the information you need about the market.
Why are investors listening to Phil Grande of philsgang.com?
You know why people listen to my show? Because I make it simple. When you talk about the stock market, they make it so complicated. I make it easy to understand. For the average investor, the Main Street investor, most of the time, these guys, it's like they're talking to each other. We talk directly to you and we listen to you.
Invest better with the sound advice of Phil Grande at philsgang.com. When you listen to the advice of Phil Grande at philsgang.com, you'll find investing in the stock market makes sense with the right guidance.
People keep saying to me, boy, things are hard, things are tough. Boy, the market's really screwed up. And I don't agree with them. For us here at Phil's Gang, we make it so it's simple. It doesn't matter if the market's bad or good. We consistently do well because we make it simple. And just like for my listeners on the radio or on the internet or my podcast, we make it simple. We try to break it down so you really understand why the market is going up or why there's continued inflation or why the bank rates are going up. So you understand, especially yields. The most important thing to understand how yields work. Just what we do. We work hard at it.
Trusted advice, easy to understand strategies that will make you a better investor. Get all the details at philsgang.com. That's philsgang.com. Want the truth when investing in the stock market? Here's how.
Hi, I'm Phil Grande at philsgang.com. Listen to my radio show every day because that's where you're going to get the truth. You're not going to get the truth listening to these dopes on Fake Business News Network. The other day, Kramer said, don't listen to the banks. They're giving you wrong information. When he told you to buy Merrill Lynch, remember? And what happened? They went broke.
Get the truth at philsgang.com.
Join my gang, philsgang.com. Get the truth. And also listen to me on my podcast on YouTube and Rumble. That's philsgang.com.
Phil Grande has successfully taught tens of thousands of investors how to navigate the market with confidence.
Hi, I'm Phil Grande at philsgang.com. That's right, philsgang.com. Join my gang for 10 days. It's free. If anything, during that 10-day period, you're going to learn how the market really works. You're going to find information that you never had before. You're going to walk away and go, I didn't know that. So join my gang for 10 days free, philsgang.com. And you're also going to learn how to make money when the market goes down. It's kind of silly just sitting there when the market going down, hoping. Why hope when you can sell short and make money? Either way, you make money when the market goes up, you make money when the market goes down. That's the benefit of Phil's Gang. You make money.
Become a Phil's Gang member and receive the training, advice, and software that will take your investing to the next level.
philsgang.com. Sign up free for 10 days.
The stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money's coming to me. Money sets me free. I'm a money magnet. Money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grande.
As well.
Don't you think, though, that yields are going higher because the growth is actually better than expected?
Isn't it amazing? Why would someone say something so stupid? Now, this gal's on CNBC. Why would she say something that just stupid? It's just dumb. Hi, I'm Phil Grande at philsgang.com. Welcome to my podcast, my radio show. I mean, yields. Well, first of all, let's talk about yields because they're really, really important, especially now as we get closer to that February 19th high. And the question is, are we going to break out? And I'll talk about that in a moment. But let's first get to the 177,000 jobs that we had in April. So everybody's all excited about their jobs today, but there was only 139,000 jobs today. That was May. Now, when I went to school, that's a lower number. And also, most of the jobs are part-time, and most of the jobs are service and health care. Here we go again. Lousy jobs, lousy paying jobs. So so everybody gets, now remember, the 177,000 jobs were fake. If you recall back then, there was only 75,000 jobs. But what did they do? They rigged the number. The BLS used the birth-death rate system to manufacture 102,000 jobs to get up to the 177,000 jobs. So I don't really listen to job numbers because it's just noise. And when you're an investor, you should just not listen to noise. All you want to know is your pricing. What is the pricing of my stock? Which means, is money going into my stock or is money coming out of the stock? Is money going into the market or out of the market? What is the bond market doing? The bond market is really important. That's what gives when you have a good bond market and yields are low, that's you can't have anything better. You want low yields, not high yields like we have now. You want low yields, and again, going back to these job numbers, okay, when you keep getting high yields, the job numbers are going the other way, and you can see that. You can see, even though those were fake 177,000 jobs in April, we have less jobs today because, again, our yields are high. Our yields are too high. That's the problem right now. And remember, the bond yields, low bond yields are important, as I said a moment ago, because low yields are credited for the high stock prices. And again, when you have these yields that start screaming up, I mean, God, everything gets more costly. Oh, and by the way, listen to this here. What she said.
As well.
Don't you think, though, that yields are going higher because the growth is actually better than expected?
It's just great. That's just dumb, right? Okay, listen to this one here. This is another good one here.
What is the total debt to GDP? Because we can grow our way out of this. That if we change the growth trajectory of the country, of the economy, then we will stabilize our finances and grow our way out of this.
You can't grow your way out of this. You can't grow your way out of debt. Anyone will tell you that it turned businesses around, bad businesses, try to turn them around. You can't grow your way out of debt. You gotta cut your way out of debt, not grow. And if anyone tells you can grow your way, now this is the Treasury Secretary. Now the only way you could grow your way out of debt was right after World War II, because it was different then. Our growth to our debt was so low, our GDP growth to debt. I mean, today it's crazy. So our debt ratio to GDP today is at 120, our debt to GDP ratio. Well, going back after World War II, they really always worked hard to get the debt down, get the debt down, get the debt down. So our debt to GDP was at 20. And that makes a big difference. But that's not where we are today, and you cannot again think you can build your way out of grow your way out of debt. It just doesn't work. It just doesn't work. So going back to, I wanted to talk a little bit again about the when she was saying about the yields here. The organization, OCED, the Organization for Economic, Corporate, and Development, now they're the big deal. They forecast a sharp GDP decline, a slowdown, because of the higher inflation. And what they're citing for the higher inflation is the tariffs. And again, that when we were averaging about 2% a year, and now we're up to almost 18%, 14% a year on these tariffs. So these tariffs are not good. These tariffs are really bad, and the economic growth is putting the brakes on our GDP growth dramatically. I mean, we're slowing down dramatically. These tariffs are really impacting the growth of our economy. And again, their forecast says right here, the GDP growth, they're forecasting to a slide of about 1.6% in 2025 and 1.5% in 2026. I'm talking about the OECD, and they're very well thought of. And so, and the same thing here, they're talking about following Trump's tariffs, GDP's facing headwinds from rising trade uncertainty. This was a real bad deal, believe me. These tariffs have really done a number, because when you go from 2% tariff to 15.4%, it was 2% last year, I just found the number, it's 15.4%. That makes everything more expensive, and that's got to cut your growth down. You can't grow. And as I said, this Organization for Economic, Corporate, and Development, which is really very good organization, you can trust their numbers. They're telling us the truth. Yeah, we got a problem with GDP growth because of these tariffs. Now, it's interesting, a moment ago when this guy said that, I played it for you, we can grow our way out.
So what is the total debt to GDP? Because we can grow our way out of this.
That's a lie. You can't. You can't grow your way out of this. This is our Treasury Secretary going all around the TV show saying that. You can't do that. It's a myth. We can't grow our way out of debt. And it just doesn't work. Now, success can only come from massive cuts. So again, remember, the reason why you can't grow your way out of debt is because of our GDP growth, or I mean our debt to our GDP. But you also have to understand things are different now, not like after World War II. So recipients of all these social programs, Social Security and so forth, the reason they can continue to afford the same amount of services, okay, all right, and because again, they tie these prices, they adjust these prices to an index, and so and when you tie it to an index, that's the only way that you can keep these like everything's affordable, like Social Security and so forth, and but they didn't remember. That's how they do it. But when you're doing that, when you're tying it to your index, then it's impossible. It's impossible to grow your way out of debt. It just doesn't work that way. It just doesn't do that. So I don't know what he's trying to selling us here, but it's just ridiculous. It's not true at all. Now, going back to the market for a moment, remember, it's now up to the banks. We need to have the banks rally, okay? And remember, we had a handful of tech stocks that drove the 20% rally off the bottom, okay? We had a handful of tech stocks. We were in all of them except two. We were in Meta, NVIDIA, AVGO, which is our Broadcom, Micron Technology, TSM, AI, which is a GEV, okay, it's a symbol, it's a AI power stock, it's part of GE, and VST is like the sister to GEV. These were the stocks that drove the market. Now, there was two others that we weren't involved with. PLTR was one, okay, we didn't buy that, and we didn't buy CRM, which is Salesforce. But these other six is what drove that market up. But what people don't understand is half of the rally that we had going back up, this was almost a 23% rally, half of it is driven by stock buybacks. So when people, it's kind of an illusion. When people look and they say, oh, look at the low here back in April 7th, how low the S&P was. God, look where we are today. Well, you got to cut that in half, because from the low of April 7th, when we were around $481 in the S&P, up to 551, okay, in April, that, again, if you can see on my chart, if you look at my chart, you can see that it's all red. So it means that the same people who sold are now buying, and therefore that's not really part of your rally, meaning it's not new money that's coming in, is my point. New money started to come in on April 25th. That's when my chart started to turn green. So now, again, to make this new high, I went through the stocks that caused this rally, but to get through is a problem, because is it sustainable? Where we are today, is it sustainable? It'll only prove it's sustainable if the banks now come in and start breaking out. So you got to remember your bank stocks. Watch your bank stocks, and we've been doing that with our members all this week. Is just again pointing out that your bank stocks are going to be the one that's going to carry the ball over the line. And if they can't do it, then it's not going to happen. Okay, so again, we got a real big problem here with our debt. Okay, and that's really it's a killer. It's killing us, okay? And Musk, I don't blame Musk for being upset. I wish he'd keep his mouth shut, but I mean, he's upset for several reasons because Trump's campaign, remember, he promised to cut debt. And you know, during the whole campaign, Musk is out there saying, we're going to cut debt, we're going to cut debt. But the bill that passed in the House will allow the debt ceiling to increase by $4 trillion. Wait a minute. You can't do both. You're contradicting yourself. And that's got Musk really upset. His hair caught on fire on that one because he's out there selling, hey, we're going to cut debt. We're going to cut debt. And then he finds out in that bill that passed the House that they wanted to drive the debt ceiling up 4%. Well, wait a minute. I thought you said you're going to cut debt. You can't do that. You can't cut debt and drive the debt ceiling up at the same time. What the hell's with that? Also, because remember, all that work that Musk did in saving that 160 billion is now all undercut with the pork that Trump put into the bill, and the House just passed. Example, it's like the reduction on tips and overtime and cuts onto Medicaid and food stamps and all the stuff that's in there. Musk is really upset because he said, first you get me out there stomping around, tell you how you're going to cut debt, then we find out you're going to raise the debt ceiling, and then I work hard, and my car dealerships got on fire, and they're trying to burn me out of business. I'm trying to help you, and look what's happening here. You're doing the opposite of what you said you're going to do. We'll be right back.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
Hi, I'm Phil Grande of philsgang.com. You know, over the years, I've successfully taught tens of thousands of investors how to navigate the market with confidence. Become a Phil's Gang member and receive the training, the advice, and the software that will take your investing to the next level. You know, I have a team comprised of successful investors, all with proven track records. And Phil's Gang software is easy to use, painless to navigate, and tells you exactly when to buy, when to sell, when to hold, when to run like hell, even short. Learn about common market mistakes and how to minimize them. You don't have to be a seasoned investor to benefit from Phil's Gang and platform. No matter what level investor you are, my strategies for investing are designed to put you on the path to success. Sign up for the 10-day free trial to see our platform in action. Avoid market pitfalls and start winning with Phil's Gang. Learn more at philsgang.com. That's philsgang.com.
Welcome back. Are you ready to make profits in the stock market? Why not check out philsgang.com or give us a call, 877-600-4264. Now, here's Phil.
And welcome back to Phil's Gang. So remember, if you want to participate in our 25 years of trading education, and we make it free for 10 days, just simply comment the word stock below, or just go to philsgang.com for 10 days. And the important thing, remember, is, as I said, the bond market's so important because it's the interest. Interest is what drives the stock market. I mean, the stock market doesn't like high interest rates, right? So you're going to learn how to read the bond market. And once you know and understand how the bond, and it's easy, once you learn and understand how the bond market works, then you can apply it to the stock market. But as I said, it's always about rates. So that's why the bond market is so critical. And when yields are low, interest rates, same thing as yields, interest rates, yields are so low, that's when we get good stock markets. And when you don't have yields that are low and you have stocks rising, it's because they're manipulating the stocks. They're manipulating to go up. Like first thing in the morning before the market opens, you'll see the night before the market down 200 points, and then you see before the market opens, implied open 65 plus. Oh, how the hell did that happen? It was down 200 when we closed yesterday. Now it's up, implied open 65. Well, they buy index futures, the index futures, the plunger team, so to push the market up, to get that market up. And then, remember, we have all these there's still, remember, there's still a lot of stock buybacks going on. That hasn't stopped. You know, the one thing that has happened is they're continuing to keep pushing in more money supply into the banks. And when you look on your M2 chart, you know, you'll see it. You'll see it starting to go back up again. So they're pushing more and more money into the banks, so to get people to borrow, to let them go get into even more debt. You know, and that's a terrible thing, but that's what they're doing. Listen to this here. This is interesting. I'll play this cut for you right here.
We should go higher. Just focus on the fundamentals. The Atlanta Fed tracker yesterday came out at 4.6% growth for the quarter.
Are you kidding? Focus on your fundamentals? First of all, I don't trust any word that the first two words is FU. Give me a break. What are you, nuts? That's number one. Fundamentals? Trust fundamentals? Are you out of your mind? That's not pricing. The only thing I trust is pricing. Stock pricing. Meaning I'm watching my stock go up. That means the price is going up. That means there's money coming in. And then I develop my own charts, okay, that are better than the generic charts, which identify when money is coming in. That's what's important. You buy a stock, you want to know, is money coming in? And then what's the interest rates? And if you learn how to sell short, there's no way you can't be a good trader. And then if you just stay with a handful of stocks throughout the year, don't be jumping around every stock that Kramer gives you and then somebody else gives you another stock. What are you, nuts? That's why 85% of people don't make money in the stock market. When you stay with just 5-6 stocks, and you can go long when the buy signal's there, and then when the short signal there, sell signal comes in, you can short it. Why have more than 6 stocks? Why go through all that effort, all that work? It doesn't really matter what stock you're in, as long as you got a good stock with good volume and the areas that are popular. And where the areas popular are tech and banks. There you go, tech and banks. What drove this whole rally up? Tech. What's going to drive it over the finish line? Banks. That's where money goes. That's where the institutions go. And to think again about all this, you know, they come out with all this crazy stuff about how we're going to take all this debt we have. I mean, my God, you see the debt? When Biden left, he drove the debt from 29 trillion up to 37 trillion. He borrowed $7 trillion. $7 trillion he borrowed because we had no money. And he went on a spending spree with $7 trillion. And now we're paying an interest rate of 3.3%. That's $5 billion a day in interest. For God's sakes, don't follow fundamentals. So now you go and you look at the bond market. And at the bond market, if interest rates are going up, you know, okay, they may be pumping the stock up for a while, Takes time for it to turn around and come down, but at the end of the day, if you're a long-term player, those stocks are going to come down. The bond market never lies to you. People on TV, financial TV, lie to you all day long. All these TV shows, they lie to you because they got to get you to buy stocks. So the debt is a real problem we've got right now, and especially the debt to our growth is terrible. So remember, the banks, which make up 12% of the S&P, compared to the tech, which makes up 30% of the S&P, they're significant. They play a real significant role in confidence. And the big institutions aren't going to come in and start jumping in and putting money in unless they see the banks start breaking out. Because the problem with the banks, and why we're worried about the banks getting us over the finish line, because there's $500 billion in undisclosed losses. Imagine running a business and you're a public company and you say, I made $10 million and you really lost $10 million. Well, you can say you made $10 million because you didn't disclose your losses. You should be in jail for that, but not banks. Banks can do it. They got permission to do that. They don't have to disclose their losses unless they get rid of the assets that's causing the losses. Then they have to disclose it. So what else was I here going to talk? I got a couple of notes I'm going to talk about today. See what else may interest you today. All right, we talked about World War II. Okay, Musk. Let's go back to Musk, because this is really going to screw things up bad. Now, Musk is upset because, as I said, he saved $160 billion working hard. They bombed his dealerships, tried to kill him, and he really put hard work in, and then Trump undercuts it. I'd be mad too. All right, and as I said before, he's out there on the stump telling us, "Hey, the president, vote for the president. I just gave him $240 million for his campaign. Vote for him. He's going to cut debt. He's going to cut debt." And then he finds out he's raising the debt ceiling $4 trillion. I'd be a little grumpy over that one too. And again, he was grumpy over the fact that in the last 8 years, President Trump approved of $15 trillion of gross new borrowing. And many of the policies that Trump is proposing during the campaign, okay, could increase the national debt even further. And so that's why I have to laugh when he sends his Treasury Secretary out to say, "Oh, we can outgrow our debt, Oh yeah, really? Oh my God! Just ask anybody who turns businesses around. When they call you and say, I got a job for you, I need this business turned around, and you go in, what's the first thing you do? Cut. And when you're done cutting and there's still too much debt, you close the place down or file bankruptcy. That's the end of it. But that's all you can do. You got to cut debt first. So the stock market right now is really waiting on these tariffs, because these tariffs are a terrible thing. I mean, that's a lot of, you go from 2.5% to, what do they say, 15%? That's insane. That's just crazy. And to increase the national debt, think about, now you got Trump, believe me, I wouldn't count him out, okay? But the only thing I'm questioning is this, that what Trump is saying, and by the way, he got a raw deal. When Trump came into office, remember what Biden left behind? He increased the national debt from $29 trillion to $37 trillion, and he left behind, not only that, but he left it behind a note in a drawer with a big FU on it. He said, "Here, happy birthday. I'm glad you're president, not me, because I just left you $7 billion in government borrowing. I borrowed $7 billion. I went around and $7 trillion, right? And I borrowed $7 trillion, and Harris and I went around on a spending spree, and so, but it's your baby now. You got to figure out how to pay the $5 billion in interest per day. So you got to feel bad for him for that. What a dirty trick that was. That's an awful thing. And then again, these tariffs are terrible because of the consequence. See, most people don't understand the tariffs, and they don't understand the bond market. And that's why we always encourage you, why don't you just join our gang, and you, at the end of 10 days, even if you don't stay with us, at least you'll understand what the tariffs can do, and what the the bond market, okay? Now, the tariffs are a terrible thing because they place all these upward pressures, I'll say, on the dollar, making, and the dollar keeps going up. Our trade deficits keep increasing, okay, over these tariffs, and it's not going to stop because he increased it from, like I said, 2% to 15%. Also, productivity declines, and now we don't export much stuff anymore, and so all the good manufacturing jobs get cut. That's why everybody got so excited today, and the market went up 500 points because of the stupid job number. Were they excited about healthcare jobs? Are you nuts? Are you nuts? What's good? I mean, sure, they're great, and people who do it is great, and we need them, but they're low-paying jobs. We need to manufacture. But the consequence of tariffs is you don't get to manufacture. You send your stuff overseas, and there's no good manufacturing jobs left. So you can't make a living, and also our unemployment's increasing, and our wages are starting to decline. I mean, you can go on and on and on. So now you got your tariffs that are in place, and as I said, you also have, which is scary, these banks. We don't know what. Let's take a look at a couple of the banks, because I'll put on a chart here. This is a little scary because if these banks don't pull through, then we're going to get a collapse. Now, was it 2 weeks ago, I said we were going to get this last rally, or whatever it was, 3 weeks ago. We're going to get this last big rally. And you knew you were going to get the last big rally because you knew we had all these people who shorted it. They got to buy their stock back. That's going to at least push up half of the losses, okay? Then you're going to get all the tourists jumping in who don't know what they're doing, and they see everybody making money and they're mad, so they jump in at the top, so they keep buying. So that wasn't a hard call. The hard call now is, is it sustainable? Is this sustainable? I don't think it is. But if it's not sustainable, you're not going to go through that February 19th high and stay there. So if you look let's go through some of the bank stocks here. I'm more than happy to do it with you. And let me just find them. That would be a big help. Are you nuts? I can't find them. Hold on 1 second. I got them here. So, yeah, the bank stocks are going to be just really, really important. So we're going to take, let's go up here and take these guys. So let's take let's see. Yeah, let's take first of all, XLF, the ETF. That's a good one to take, okay? And let's put my chart up here on 6 months. Okay. So, again, you can see right now that it's turned green, okay? And because remember, it was red here because it was warning me and my members not to buy in here, even though it's going up, because if you bought right here, you could have opened up your eyes the next morning, it was all the way back down here. When it turns green, the chart tells you got plenty of money going in, so you're going to be okay. But we've been going sideways for quite a while here now, okay? And you can see the banks, they haven't broken out yet. These are the guys that got to break out, and we need good volume, not a little volume. So keep your eye on XLF. That's the ETF for the banks. This is going to help you a lot, because if that goes, then the S&P should push the S&P up through that February 19th high, okay? Now, that's one bank. The other bank I like is Citibank right there, and that's starting to break out there too. So what I'm saying is, look, why don't you just, again, for information on our 25-year stock training program, all you have to do is comment the word stock below or go to philsgang.com, free for 10 days. And I'll see you again next week.
You have been been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's